Okay. So then, if we take this, what if we shift gears a little bit? How do we take this and do what's called a 1031 exchange?
If this is your primary residence, there's no such thing as a 1031 exchange. That's only for investment properties.
Oh.
So, but that's good. So let's say you bought a rental property.
So that's a house we're renting. Same scenario.
You're renting it out. Doesn't matter how long you've owned it. I think now I'm getting into CPA territory.
Woo!
Here we go. Here's the kind of the
here's the idea.
Here's the idea. Please consult your tax advisor. Okay. You bought it for $300. You're like, if I sell this thing, I'm going to have to pay a capital gains tax on that. But I want to buy another property. So you take this. What happens is you go ahead and sell it. Now you got to set this up. This is where you need the team thing. We got this. We'll show you how to do this. But you take this would be taxable. So what you're doing with a 1031, it's called a tax deferred exchange. And that means you're going to take that every penny of this. You can't touch that money. It goes into an account with what's called an accommodator, and it sits right here, right? And then
part of the team.
Part of the team. We have a team we have people that do this. That actually, that know how to do this. You the money, and you have to identify a property, a new one to buy within a certain amount of time, and you can go consult our tax advisor for that one.
Yeah.
And then you take this money and you buy a new property at, let's say, $622,000. You're going to buy a new one. So it's a 1031 tax deferred like kind exchange, meaning you're going to buy a similar type of property, real estate, basically. So you take that money, apply to that. How much you borrowed on either transaction is irrelevant. Doesn't matter. It's just you have to take all this money, let it sit there, and then use it for the new property. You cannot pull out a penny of that money.
Okay. So with this, then, if this was coming out of a rental, does this have to be a rental?
Yes.
So if this is, so it has to be like
kind exchange. So if you're buying investment real estate, selling investment real estate, buying investment real estate, now there may be some loopholes. I have no idea. That's why we have the guy. We have our guy,
the Godfather
of 1031 exchange.
Yeah.
With that cool. That's a good logo, actually.
That is. I like that.
Yeah. I don't know what it is, but anyway, but that's how that works basically. So by the way, you want to make sure we get this nailed down before you sell.
Yeah.
Because it's much harder to fix it.
Because like Brian said, there are timelines to this to where you've got to identify a property or multiple properties that you want to use this for. And then so you have a time to identify them.
Yeah.
And then you have a timeline to close on them to use this before you get taxed. And sometimes this gets to be really hairy because I had a gentleman come out of Los Angeles that he was leaving California and was using his 1031 exchange to get property here because California was going to brutalize him. I mean,
federal and
between federal and state, I mean, it had to be. It was like a 60% number. It was something just
crazy,
buckling. And so anyway,
because now this might get more technical, but here we go.
Oh, okay.
If you bought this duplex, right?
Yep.
You're renting out. You're not living there. You're renting it out. You sell it for this. For those 5 years, let's say, you've been depreciating the value of this and taking that as a tax write-off. So that $300,000 purchase price may be depreciated down to 200 and something.
Probably
240. Please consult your tax advisor. Did we say that already?
Yeah.
So your capital gain is now what?
210.
210. That is not legible, but anyway, you get the idea. So, and that can be even worse. So you need to get our team involved before you do anything crazy.
Yeah. But the whole thing with this is, again, capital gains, there's a way to do it. 1031 exchange, there's a way to do it. There's a way to do anything. It's just about connecting the dots and making sure that you've got the team associated with.
You need these people.
Getting it
what they're called, Doug?
Family.
Yeah, that's it. Experts. Not handwriting experts, but experts.
Yeah.
That's what you want.
Experts.
Experts. riding sideways.
Oh,
Okay, there you go. That's yeah, but you gotta get that figured out before you do it.
all right. Well, there you go. Capital gains 101. Thanks, Brian.
You're welcome.